What of those tailwinds that you underscore that change from the 3Q to 4Q can we expect to continue in 2024?
Let me give some highlight about the 4Q, and then we can talk about whether that will continue or not. Quarter 3, as I mentioned, actually was reasonably strong. It's actually plus 15%. We met the expectation in operating currency. Quarter 4 start with a bit of softness, and because the sentiment is a bit fragile, I think we overreact a little bit. And then the trading improved over November and then December. And then, the quarter 4 actually recovery is quite all right. And if I could highlight our learning from the trading, basically the recovery is across the city tier, across the region. Although eastern part of China is still the most resilient part, and the northern part of China recover the best because last year's lapping. And so far, the Chinese New Year, the trading is vibrant, is solid. However, I would say it's still early days because Chinese New Year is a very intense trading period, and right now the weather, particularly some extreme weather in some part of China, is still a wild card. But we have a very exciting program for Chinese New Year and quarter 1. Yeah.
Joey, you mentioned a bit of the recovery in between quarters. I'm just wondering, how would you describe just the business environment now? Is this just a temporary sort of consumption slowdown? Or is this something of a new normal where the consumer sentiment and purchasing power isn't just as strong as the good old days in some ways?
It's a really, really good question. I would talk about the consumer sentiment, and then I'll talk about what is the same, what's the different. The consumer sentiment is there. Again, there are a lot of discussion about consumption downgrade or lack of consumption confidence, etc., etc. However, I would like to share a slightly not so mainstream thinking. With the GDP growing at mid-single digit, we actually can still see some consumption upgrade in tier 2 city or below. And one number I ask our shareholder or our analysts to refer to is the number of shopping malls that opened during 2023. So we, Young China, we track the top 6,000 shopping mall in China, which is good quality shopping mall. And within that segment, during 2023, there were additional 400 shopping mall open. But they were open mainly during the quarter 3 and quarter 4, so not so obvious. However, when the new shopping mall open, you can imagine some consumption upgrade from the high street to the shopping mall. And by the way, other than the tourist and transportation hub stores, shopping malls are doing better than the others. So the long-term upgrade might be happening as well. So that's one thing about consumption behavior. The other bit is the consumers are getting more rational, but in 2 ways. One is, of course, they're looking for more value. By the way, we see that maturity of consumer all around the world. More value, high quality. Second, they're rational. Also, they are also having this appetite for upgrade product. We sell 50 RMB Wagyu beef burger in KFC. At the same time, we introduced the 20 RMB combo for a meal at the same time.
I was going to ask you about that, Joey,
at the same time.
Because a combo meal is less than $3 US at KFC. You talked about pizzas and Pizza Hut are less than 50 RMB. I mean, is this a price war, given just the intense competition among fast food chains now in China? Can you call it that? And how long does this promotional environment, and how long can it last?
I would not call it price war.
Analysts were expecting your capex, which I believe is $850 million for the year US dollars, to come in closer to $1 billion. So that's slightly below estimates. but you're also returning more money to shareholders, I think in the form of
Yes.
buybacks. And I put those two things together, and correct me if I'm overthinking this, that you returning money to shareholders instead of putting that money in CapEx, is that a reflection of a conservative outlook for the year?
We're doing it both, right? Both in a very, sort of optimistic way. We have always been committed to invest in our business over many years. We consistently increased the number of new stores, all the way from 2016 when we opened like 300 plus net store a year, now all the way to last year 1,600, actually slightly shy of 1,700 stores. And then while we upgrade the store, while we invest in supply chain, we invest in IT, we just have been stretching the money really far, because think about 2016 or 2017, we only built about 300, 400 stores with about $410 million US dollar. Now we don't even double the amount of the capex, but yet we built 3 or 4x more stores on top of investing in supply chain and digital. So we've been very aggressive, but at the same time, it just shows that our ability in generating cash is very strong. So we have excess cash, and we are always committed to our shareholders that we will return the excess cash to the shareholders. So we are still growing very strong, but at the same time, we commit to that, to the excess cash return to the shareholder as well.